Another question that we have been asked by DismaSter users is how to exclude spousal support from state taxes in ex-spouse, just like in DismaSter, particularly when dealing with net spendable income. Initially, I was somewhat confused by what DismaSter was doing in having switches for making spousal support payments as deductible or non-deductible, and spousal support received as taxable or non-taxable for state taxes, and having the B key toggle for adjusted and unadjusted net incomes when both do exactly the same thing in DismaSter. If you have a look at the tax forms, you'll see that in DismaSter the unadjusted guideline net setting actually excludes spousal support from state taxes, which is what the tax switches do. This is equivalent to the ex-spouse tax forms with spousal support being excluded. However, in ex-spouse, when spousal support is included, spousal support is displayed in the tax forms even if unadjusted nets are being used. It simply means that the spousal support displayed on the main screen and the tax forms is based on unadjusted net incomes, so the tax forms and main screen display remain in sync at all times. Both programs calculate the same guideline net incomes, but when it comes to displaying taxes and support payments, the implementation is slightly different. This difference in implementation of the displays results in a slightly different approach when wanting to compare net spendable incomes when we make spousal support a non-tax item for California taxes. The reason for this is that net spendable income is defined as the unadjusted guideline net income minus the cost benefit, where cost is child support paid plus spousal support paid minus tax saving. The tax saving is the saving resulting from payment of spousal support. In ex-spouse, you see this on the cash flow display by observing the total taxes value for the two spouses with spousal support included and excluded. Note that the amounts of child support and or spousal support will be positive for a payor, negative in the case of a recipient. Tax savings will be negative in the case of a recipient of spousal support because of it results in a tax liability. In the situation where we set spousal support as non-taxable and non-deductible in DismaSter, there are no tax savings, so the cost benefit is simply the total amount of support. In ex-spouse, because the tax form display remains in sync with the displaced spousal support on the main screen, to replicate the DismaSter display for cost and net spendable incomes when spousal support is set to non-taxable or non-deductible, it's just a matter of realizing that turning off taxability of spousal support is a tactical maneuver. So we simply open up Tactic 1 in ex-spouse and set the total support payment as the non-deductible support in the tactic details and press OK. When we return to the main screen, we need to be sure that there are no exemption releases being displayed, so we block them by pressing the E key. When we now view the proposed column, we see that the payment cost benefit and net spendable incomes are the same as in DismaSter. If you use adjusted nets, ex-spouse still uses the unadjusted net when subtracting the cost to arrive at net spendable income after adjusting Tactic 1 details for the new adjusted cost. In DismaSter, I don't think you can do the same. In summary, If you wish to compare net spendable incomes between disamaster with state taxability excluded and ex-spouse, in ex-spouse use tactic 1 and set the non-deductible amount to the total support being paid and block exemption releases if there are any by pressing the E key. The results will be displayed in the proposed column.